Hi, this is Daniel, and you're watching Unrivaled Investing. This is a no-hype, mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, the types of stocks that could potentially go up hundreds or even thousands of percent over time. Originally, I thought Catapult could be a potential multi-bagger. It traded at a low teens multiple and was growing very quickly. I discussed it in greater detail in a prior video, and we'll talk about that in just a second. That said, Catapult has been in a terrible ride. It's been a complete dumpster fire. At one point, it was down about 70% from its deal value. And so investors are sort of wondering, well, where to from here? Does this company actually recover? And today alone, it jumped 40%. And so now investors are going, well, wait a second, maybe there's some potential here. So I want to dive into sort of what's been going on with the stock because it's been part of my journey at one point. I do own part of the Catapult warrants, a teensy weeny percent stake. Talk more about that in a second. And so let's dive into what's been going on. So today, Affirm stock jumped nearly 50% after announcing on Friday evening a partnership with Amazon to enable buy now, pay later for Amazon customers. This will help customers split the purchases of $50 or more into smaller monthly installments. I'm skeptical that this will really accelerate the growth for Affirm because Amazon already does have some payment options such as their credit card and let's say splitting a fee up to 6 months. So I am skeptical that this is going to drive immediate acceleration in Affirm's business. That said, maybe Wall Street's right and it will drive significant growth because jumping 50% in a day does suggest that this is a material development. So what's all of this have to do with Catapult? Well, Catapult jumped about 40% today in sympathy with what happened with Affirm. Now, why? The reason why is because Catapult has a relationship with Affirm. Affirm provides this buy now, pay later options to customers, prime customers with that meet their algorithm, effectively have good credit scores. That's where Catapult steps in, where Catapult is this waterfall for the non-prime customers that don't have the pristine credit scores. They are automatically effectively redirected to Catapult, where Catapult's algorithm will run and say, hey, we're willing to offer you a buy now, pay later option. And this got investors really excited because Affirm had been growing quickly, and so had Catapult. Catapult had grown from $40 million in revenue to $250 million in revenue in just 2 years. Incredible growth, and they had significant origination growth and was also profitable. So this got folks really excited. I made a detailed intro video based on their initial SPAC presentation. It initially traded as FSRV, now it trades as KPLT. And so the short summary of the business model is that they provide effectively lease to own solutions. Let's say, this is a non-prime customer. They need their refrigerator broke. It's the middle of summer, or they need a new AC unit, and you're looking at some sort of expensive one-time purchase, and they just don't have the funds to do it. And so here it is. They can buy it online using buy now, pay later options, such as Catapult, where this item might cost $1,000, and all in, you're going to pay $2,000 if it's paid in full over the lifetime of this full 12-month term. Now, $2,000 versus the $1,000 up front, that is very expensive, without a doubt. That said, it does enable customers that need it. If you have a purchase where you absolutely need to buy something, maybe, the appeal here for customers is that, and this is part of the reason why Affirm partnered with them, is that they're very straightforward with what your fees are. You're not going to get this sort of crazy interest, and that's the core problem, is that they're trying to defeat the credit card industry. The credit card industry, you buy something on credit, and then if you don't repay your credit card, you're going to get charged 20 to 30%. And that's the problem that Affirm is trying to address. And this is the reason why Affirm partnered with Catapult, is both of them don't have this sort of death spiral that's created by if you buy something and you can't pay it off. It becomes very clear, like, hey, we're just not going to provide anything else to you, and hopefully the fees that we include in this, or the markup, effectively the interest rate that we're charging on this, that's very clear. It doesn't have the potential to compound, to spiral. The max amount that you're going to pay for an item is upfront. And so, yeah, a 2x markup seems like a lot, but it's actually better than what a lot of folks are already paying with credit cards, where you can be paying 20 to 30% interest for months and years. And so that's the reason why Affirm ultimately partnered with Catapult, in that they shared that same sort of mission of saying, you know what, this is better for consumers versus credit card debt. And so this is an illustrative example of what what a customer purchase might look like and the different fees. You'll have this $45 initial fee if the customer says, hey, wait a second, within the first 90 days, I recognize that this is going to cost me effectively 100% premium, 100% markup. They just want to get out of it and pay down the full thing. They can for about a 5% fee. So now it's going to cost around $1,095. So it does show you what your different options are for, let's say, early buyouts versus paying for the full term. Now, I did have some concerns, and I called this out in the Catapult video, saying, look, I'm effectively impressed with the numbers that they've put up. They're not as sexy as Affirm or an Afterpay because they're non-prime. That said, it's a service customers need. What I didn't know based on the presentation was, are there core customer concentration risks? And I this is part of the video I made with Catapult. You can check it out yourself. Sort of saying, I find this to be really interesting, but there are real risks here that they just haven't disclosed. And so what happened subsequently? So what happened is I bought a small position for myself in the stock subsequent to that Catapult video, made it a few percent of my portfolio, and I even called it out to Unrivaled Investing Journey subscribers as a potential multi-bagger. Why did I see it as a potential multi-bagger? I saw a company growing very quickly, providing what I'd argue is a needed service, which is certainly better than credit card debt, and growing at 100% suggested, hey, you're doing something special, trading at a low teens multiple. So I liked the setup that I saw, and so that's why I started off buying, let's say, a small, couple percent position, sort of sizing this up. But I recognize I'm not going to make this a big position because I don't know all the risks out there. Let's buy a little and see. And that's what I often do with investing. It's constantly updating based on new information. If you think that, you can't update your thesis without new information, you're not playing the right game, folks. You need to constantly update the thesis based on the new information that comes in. And so I said, I'll start with this, couple percent, and let's see what happens. Let's see what they disclose in the near future. And sure enough, on a Friday night, they disclosed, Wayfair is the vast majority of our revenue, something like 70 to 80% of the revenue. And I was like, what? How do you disclose that on a Friday night and not put that in your investor presentation? I thought it was quite misleading of management. So then and there, I knew, I can't really trust management. So then the question is, well, what do you do with the stock? So I sort of reflected on that. And then, when the market opened this, on Monday or Tuesday, I was like, you know what, I'm going to get out of this because I can't trust management. And part of my investment journey is I want to be in situations where I largely can trust management, put my capital to work where management has significant skin in the game. And I'm excited about my journey. I'm excited about the companies that I'm invested with. I'm excited about their journey too. And that's why it's called Unrivaled Investing, and it's a journey subscription. And so that's what I looked at with Catapult, seeing that effectively management misled investors by not disclosing this huge customer concentration risk with Wayfair. I was like, okay, I'm out. That said, I started having some doubts, and I was like, well, the reality is they did grow quite quickly. And so even if management wasn't upfront about this, there is that chance that it's potential multi-bagger. So I said, let's buy a teeny weeny position in the warrants, because the warrants effectively leverage whatever capital you put at risk, so that way you can get a similar upside to owning the stock by putting up a lot less of the capital. So I bought like a 0.2% position, 0.3%. It was really small. It was well under 1%, that's for sure. And so that was the stake in Catapult. And so what happened since then? So what happened since then is that they reported their second quarter 21 results. Now keep in mind, this is after I called it out as a potential multi-bagger, after I closed the position, told Journey subscribers, yes, I'm no longer consider this a multi-bagger. I'm closing this. I personally am putting on the warrants. I'm not calling that out as a potential multi-bagger though. I'm doing this because it seemed interesting and trading, growing very quickly and seemed at a cheap valuation. Then second quarter dumpster fire happens where, they announced 27% revenue growth versus their guidance just a few weeks prior of something like 70 to 80%. So a huge miss on what they were guiding to for the year. Their originations of new leases were down 17% year over year. Huge miss. Dumpster fire. They do say, okay, but we onboarded new merchants. Yeah, it's not translating into the results you want to see. Swinging from a profit to a loss. Oh my goodness, this is just a terrible gag. And it was a disaster. 70% plus drop in the stock. The warrants dropped even more, looking at it. And part of the reason why is management gave, in my opinion, this baloney excuse. Oh, the macro environment's difficult, e-commerce, sales difficult, COVID, changes of perception of what people want to be buying, maybe consumer, people aren't buying the durable goods that were previously driving this. I looked at this and I just said, this is a disaster. This is another example where effectively management has misled you. And so I was like, oh my gosh, so this is bad news. What do I do from here? So what am I doing from here? Let me do a quick plug where if this is your first time viewing, my name is Daniel, you're watching Unrivaled Investing. If you enjoy learning about companies, please make a point of hitting that subscribe button. If you're already a subscriber, I do appreciate that thumbs up. I try to call it as I see it, whether or not it works out. I tell you, I'm like, you know what, here's a situation that clearly hasn't worked out, but I'm being 100% straight. I'm calling it out as I see it. If you want to follow my personal journey, go to unrivaledinvesting.com. First week of the month, I call it my full portfolio. By the end of the month, I call it a potential multi-bagger. And during the month, I have weekly updates as well as daily interactions on our exclusive Discord server. Talk more about that later if you're interested. If you're interested in learning more, go to unrivaledinvesting.com. And so what are my thoughts on this? So first of all, I view this largely as a lottery ticket. And so what do I mean by that? I mean, most of the time with investments that I view as lottery tickets, it's a teeny tiny position. And I have a few of these teeny tiny positions where it's like, I expect this to be a zero. That's going to happen most of the time. But occasionally there'll be something where, you know what, there was something special here, such as growing 100% year after year, that might, and a cheap valuation, that might work in the future. Now, I'm not going to make that a big position. So that's part of why I break down my full portfolios. Like you can see by percentage is like, oh, this is an immaterial position of my portfolio. If I woke up and it's a zero, okay, it's disappointing, but. And so I look at this, the Catapult warrants, KPLT warrants, as really a lottery ticket on effectively saying, I can't trust management. That said, this partnership with Affirm, their historic growth, buy now, pay later for non-prime, that does strike me as having potential. And they have signed up real customers like Wayfair. So I'm looking at this and saying, there's potential here, and we'll talk more about that in a second. I can't trust management though. And that's become very clear from one, not disclosing, the customer concentration, and then just completely trashing their guidance, pulling their guidance weeks after effectively reiterating 70 to 80% growth. Then they effectively say, we don't know what's going on. So the stock falls 70%. And so I don't trust management, but they're buying back stock, or they're buying in stock for themselves. So the company's not buying back stock. They're buying stock for themselves. The CEO is buying hundreds of thousands of dollars worth of stock. So is the general counsel. So is the chief accounting officer. So is the CFO. So I'm like, okay, so I guess they're getting more skin in the game. They're saying, yeah, it's down 70%, but that's maybe cheap. And we'll talk about that in a second. So once again, this is a lottery ticket where I expect most lottery tickets are not going to work out. Most lottery tickets are going to be a donut. And so I look at the valuation and I'm thinking, now that it's down, even at $5 a share, where it's down 50% from its deal value, it's still trading at effectively 1 to 2 times sales for a company that was previously growing at 100%. And this was before the COVID bump that they were growing pretty quickly. And they're still onboarding new retailers. So if there's this potential for them to grow, let's say 20 to 30% in the years ahead, then this could be a home run. Could be. And that's why I view this as a lottery ticket, is at this point, management has sort of proven that you can't trust them. And they do have a model that historically has worked. So far this year, it's turning into a dumpster fire. They do have this partnership with Affirm. So it's sort of this mixed story. But I'm looking at this valuation thinking, you know what? This seems pretty reasonable, but I'm not going to go crazy. So I'm not going to buy any more. It's like a 0.1% position. It's teeny tiny relative to my total portfolio. My portfolio is predominantly in things where I'm like, yes, I like this company. I think this is a potential multi-bagger. CEO has significant skin in the game. I'm not thinking that there's going to be a 70% blow up risk. Like that's, I'm not playing the lottery tickets with the vast majority of my portfolio. It's just a sprinkling here and there. If you're interested in learning more about the potential multi-baggers, I do call out, and the ones that I buy for myself, go to unrivaledinvesting.com. Just this past month, I called out one that was growing 200 to 300% this year alone, trades at 3 to 4 times sales, which strikes me as super compelling. So anywho, if this video has been helpful for you learning about Catapult, sort of the recent updates, why has it been so volatile, I think a lot depends on individual investment journeys. Like some folks say, hey, I just want to concentrate in my best ideas and I'm going to own 3 stocks or 5 stocks and that's going to be it. And so for me, I'm heavily concentrated, let's say in my top ideas. My top 10, top 15, that's going to be the vast majority of my portfolio. But I will have a sprinkling of little things here and there where it just spices up the journey. So if this video has been helpful for you, if you enjoyed watching it, please make a point of hitting that subscribe button, hit that thumbs up. And if you also think, Daniel, you're just wasting your time and you're being a knucklehead, you know, even considering positions where you no longer trust management or what have you, I'd love to hear your comments below. So share your thoughts. Feel free to share a little bit about your journey if you'd like. And thanks so much for watching.